Everyone, today is Thursday, the 10th of April. It is about 5 o'clock in the morning. My alarm's going to go off here in a minute. I'm up early. This is the Plan Your Trade video for April 10th. We are looking at a flat down pattern today, moving into breakaway. Notice that we have no counter trending until this bar here, which is a blank bar, and we're moving into bearish exhaustion. So you can see as we move into this end of week pattern, we have a flat down in trend mode, which is generally like a harami or an inside bar. Then we have the breakaway and carryover. And the breakaway and carryover, we're going to see we're currently in a bearish trending mode with bearish daily bias and bearish weekly bias. And we move into this breakaway pattern. Right now, I'm going to go over the charts with you, but I'm kind of mixed on this breakaway. And then we have the up, down, up. So understand that today should be slightly positive. Tomorrow should be a down pattern. And if we get it, we'll get the up pattern here on Monday. That would be an up, down, up. It's like a sandwich pattern, basically up on Thursday, down on Friday, up on Monday. Then we get a base rally in trending mode, should be an upward trending bar, moderate possible carryover trending, counter trend, nothing. We'll see what that does. And then we get into this bearish exhaustion, which means that we might be moving up into this bearish exhaustion, rolling into this inside breakaway, counter trend breakaway, rally and carryover mode, carryover and trending mode, then another inside breakaway. Someone asked, what's the secret? How come these things are so accurate? And you know what? Generally, I find my cycle patterns to be about 70, 80% accurate. I mean, there have been periods where for 60, 80 days, they've been almost perfect. Spot on. You can trade off of these with no problem, but you have to adopt an A and B strategy, meaning today's a flat down. What happens if the flat down doesn't happen? What happens if we get some news and it's a breakaway? So let's come over here and look at the chart and try to explain this to you. This was the chart that I had done yesterday, highlighting the consolidation range and what we were looking at. So I'm going to get rid of some of these because we don't need them. Just wanted to show you where I'm coming from. And really, I want to point out a couple of things if I have time in this video, which is why I'm trying to kind of rush through things. I can leave some of these here. Get my mouse to cooperate. Okay, here we go. Here we go. I'll leave these out here for now. So we have the consolidation range. We have the big breakdown. We're looking at how this is going to potentially play out. This is a daily chart. We have this rolling pattern. So now I need you to understand something here. I'm going to get rid of some of these lines and really try to show you what's going on. I may flip to another chart here. So we've got this big breakdown. I've been focusing on this excess phase peak pattern up here for the SPY. And I want you to understand that this excess phase peak has had my attention because it's the biggest, broadest excess phase peak pattern that we've got. But we do have a new high right here, okay? And in theory, as I've mentioned to you, these excess phase peak patterns happen all the time. We reach a new high, we pull back, there's an excess phase peak. We reach a new high, we pull back, there's an excess phase peak. We reach a new high, we pull back, there's an excess phase peak. We reach a new high, we pull back, there's an excess phase peak. So now, knowing that we are going through these excess phase peak patterns continually, and that is part of the process of trading, this new high setting up this excess phase peak indicates that we're breaking down into this consolidation range, this consolidation zone 2. So understand that I will mark this in red because in theory, ladies and gentlemen, this broke down into consolidation range here, setting up the ultimate low. I did a video about that last night. This could very well be the ultimate low for the blue setup. Okay. Consolidation zone, peak up here in blue, breakdown of the flag, moves into consolidation, breaks out of consolidation, hits the ultimate low. Okay, makes perfect sense. To me, it makes perfect sense. There's the low. I get it. Right here in blue, there's the low. That is our ultimate low for the blue pattern. We've already completed this entire breakdown into consolidation, breakdown to ultimate low, and now we rally back out of it. Okay, but this little red pattern here indicates that we could be moving into a breakdown into consolidation, like I've drawn here, which could play out into the July low. So understand that now this second pattern breaking down into consolidation here would indicate that we have a consolidation range establishing. A closing way up here, as you're aware, the way I look at big closes like this is we have to watch for rejection. So what I'm looking for right now is, do we hold up in this level or do we reject back down low? That's what I'm looking for here. The inside pattern, the Harami line pattern, flat down and breakaway, are going to be key to determine what's going on here. We need to see what happens over the next day or two, and I need you to see this structure. Now, what got me really thinking about this was everybody's question. Brad, how are these so accurate? What's going on? I stick with price data. I don't try to mix technical indicators. You can see what I'm doing. My cycle patterns are based on, as I mentioned to you, Gann, Tesla, and Fibonacci structures. In reality, this is a complicated inference engine that identifies these patterns. I had to create these labels to look around, figure out what was actually happening. And then there's an inference engine lookup system that looks up these patterns. These are automated based on a proprietary trending model, and this is a proprietary trending model as well. It comes from a different source. So, but part of what I'm doing is to look at these in a different context. So I have my spider sectors, and I want you to pay attention to this. Okay, here's the big excess phase peak pattern, the one that I suggested in blue, rolling through here. There's the blue pattern, the blue excess phase peak. Okay, it happens on all kinds of charts. So look at this. Auto scale, XLC, pretty easy. Coming back up, rolling up to this peak. Of course, we get this low here. This is a failed rotation up here, breaking down. Now you can see how this results as a stall for the breakdown and moving into the consolidation range here. So remember, we have the A reaching a peak, the B flagging, the C breaking down into consolidation, which is here, the D moving through consolidation into an ultimate breakdown somewhere down here to an ultimate low. So those are the structures. Okay. And again, I want you to be aware of the fact that we're starting to see these broad structures. And you can see this breakdown here rolls down as a secondary structure, comes up, hits a high, rolls down, flags. This is the red structure, and then breaks down into consolidation. So now we have blue and red moving down into consolidation. So we're getting a pretty good idea that this lower consolidation range is very important and is likely going to play out. So now look at XLF, same type of setup. We come back over here to blue. We can see the low, the flag low. We break down. We don't get below the flag low. We roll back up. We break down into consolidation. There's our consolidation range setting up. Oops. Now we have the red. The red, of course, sets up here, comes back down, flags out again, breaks down below the flag into consolidation. Wow. Look, all these charts are telling us how important this consolidation level is. All right. Well, look, let's come over here to XLP. Okay. Real simple. Consumer staples. What do we get? Well, do we get the same type of setup? Well, you can easily see this move here, this excess phase peak pattern breaking down into previous consolidation in this area. So here's our breakdown into consolidation. Do we get multiple breakdowns? Well, yes and no. We get this peak back over here. We get this peak here, rolls down, forms this flag. There's actually a couple of them in here, but this is the important one. And we roll back over here through this excess phase peak pattern. And then we break down into that consolidation phase, which comes all the way through this and starts to move through consolidation. And then we eventually break back above this consolidation phase. So this is invalidated. This is a perfect example of invalidation to the upside, setting up another excess phase peak pattern here right across essentially these rejected highs. Okay, so this is a dual topping pattern, multiple excess phase peak patterns, dual bottoming pattern down here, telling us that consolidation in this range is very, very important. Okay, no matter what I kind of look at, energy, same type of scenario. Okay, we've got this breakdown in energy. You have to go back a long ways to see where this support level kind of plays out. But remember, we've got this really, and it's going to be hard for you to see, but we've got this peak coming down into flagging. We've got this peak coming down into flagging. You can kind of carry this out. We've got this dual breakdown. This is kind of a dual excess phase peak pattern. This would be our peak level. We are moving through a consolidation phase here. We're breaking down into consolidation over here. We have consolidation lows right here and in between here. Ultimately, we would get some sort of a breakdown into a breakdown low. Now, these lows, you got to remember, we need to see where these lows play out, and they're pretty much right above this gap, right down over here. And of course, you can carry these right across this middle channel here, which has been set up by this double low. So here's our consolidation range. It's basically telling us that the markets, no matter what we do, no matter where we look, we're starting to see this consolidation pattern set up considerably. I mean, everywhere. Okay. Here's our flagging. This is XLI, peak, roll, flag low, peak high. Sorry, it should be a horizontal line. Breakdown into consolidation, big wide range consolidation, possibly setting up in this area, ultimately moving into a breakdown low. Okay. Breakdown low, given the range. Remember, I keep talking to you about this. Is we are looking at basically 100% measured move here down to these lows, 100% measured move down to these lows, almost perfect, 100% measured move down to these lows, almost perfect. So in theory, the ultimate low on XLI should be about $100 if we get to this ultimate low level down here. And again, just using price theory, not using indicators, not using anything else. And now knowing what the structure is like and where we're at in this consolidation range, I can come back over here to the SPY and I can tell you that this consolidation range, before I run out of time, is critically important. So I think we're going to stay kind of in this range here out until June. And this, in my opinion, is critically important. I think that the markets will be trapped in this zone. I don't think we're going to go anywhere. Of course, we could invalidate, but given my analysis, I think we're moving into this sideways channel and there's nothing we can do about it. Okay, price must stay trapped in this mode, so we're going to consolidate back into this area looking for a breakout low probably in June, July. Okay, I've only got like 5 minutes left. So gold and silver are ripping. Okay, gold and silver are ripping. We've got a crush pattern today. I think the markets are going to stay fairly mellow with the flat down pattern. I think that's going to represent a big solid breakout in gold, probably up into the 3170, 3180, 3190 area. I'd like to see it. I really would. Could be even bigger. Crush patterns can be huge. I mean, literally just huge. That could send silver back up into the 32 area. So really, we're kind of looking at a move kind of like this, anywhere up in that area or anywhere up in this area. With regards to silver, be aware that this crush pattern is massive. These can be huge. Again, gap potential in a counter trend mode. What does that mean? Friday, we could be looking at a bit of a pullback. So depending on how we see this trend move today, which I think will be up, we could get a gapping rotational downward trend tomorrow in gold. So unless you're prepared to hold, which I am, into this rally, into this momentum rally, this looks very good next week. Carryover, counter trend, inside breakaway. I'm not too worried about that. And we'll go from there. Okay. Now, lastly, let's go over here to Bitcoin. Where's my main chart? Nope. Here. Yep. Okay. Bitcoin. Try not to run out of time. So, Bitcoin is again, and this is a good example, and it looks cluttered. I'm sorry. I know it looks cluttered, and you're going to say, Brad, I can't understand this. Well, I draw to try to show you things, okay? And I draw a lot. Every day I come out and I try to reestablish the same type of analysis. My analysis doesn't really change. If you follow me for the last couple, 3, 4, 5 weeks, you'll notice that I've been telling you the same things every morning. I just take it 1 or 2 or 3 bars further, telling you what's going on and how it's going to play out. And I just got a comment. He's never seen a better trader. Well, I'm not here to win accolades like that. It's nice. But what I'm here to do is tell you guys what I see and how I see it playing out. So now we're in this consolidation phase. I'm going to come here and highlight this line. That's the red line. See if I can get to the thing underneath. Yep. Okay. I want it to be darker. And I want this to be darker. Here's the consolidation range. So we're in this consolidation range now in Bitcoin. We've moved through the flagging into consolidation. And look, we've got a nice rally yesterday. We're right back up to where I highlighted this red line. I'll make it dark red or dark purple so you can see it. And this is where I think we're going to stall back out and consolidate. So what I'm looking for over here in Bitcoin is really another roll down, up, and then possibly a breakdown. Okay, that's kind of what I'm looking for. I think that's highly likely. And I think this consolidated range between 82,000 and call it 76, 75,000 is going to eventually break to the downside. That's going to be more so probably towards the middle end of April, like 21st, 23rd, 24th, 28th of April. Okay, how much time do I have left? I don't have much. So again, where we're at with this, the patterns, the markets, the data, the spider sectors are all showing this yellow range right now is very critical. And I would suspect that we are going to tighten down into this lower channel. So I'll highlight this and tell you that I think we're going to move into this lower channel over time. Could play out even further. And what we're going to be looking at, guys, is that lower channel being the more constricted price range, consolidated range for this move. We've got this primary flagging pattern moving down into a secondary flagging pattern, which does align cleanly with this breakdown. This is our consolidated range for the blue. This is our ultimate low. This is our consolidated range for the red. And that's why I think that we're going to stay in this mode for a while and consolidate. Going to be wild watching it roll around, but I think we're going to stay in this consolidation range. Okay, guys, that's it. Talk to you later. Go get some. Remember, today's going to be a flat day. So trade small, trade deliberately. Make sure you're not just swinging for everything. This is going to be a fairly flat day. Now, again, flat in a fairly big range, but fairly flat overall.